recipes for technical trading success in Cook's Kitchen.
Is ESG investing distorting the market? I kind of lean that way, but I'm trying to also figure it out. So today I'm going to do sort of a survey of the ideas that are out there and what's in some of these funds and how they're built as I do more research and explore it. Right now you're looking at a graphic of the top 10 performing U.S. ESG funds and what their holdings are of big cap tech: Alphabet, Amazon, Apple, Facebook, Microsoft, Netflix. So, you may not have been aware, but last year the FT was doing some good stories on funds branded ESG are laden with technology stocks. I think they had. I want to share this quote here. This was this September? This was August 2020, so a year ago. And they said up to July 27th, so a year ago, 8 of the 10 best performing large cap U.S. funds that incorporated ESG metrics as a key part of their selection process had either Apple, Amazon, or Microsoft as their biggest holding, according to Morningstar data. Here's another look at it. You can see Refinitiv found high concentrations of Facebook. Maybe this is the way Morningstar ranked their top funds, with lower holdings of Facebook. That Facebook by itself is an interesting one because, maybe big cap tech is ESG because it has a low carbon footprint and maybe some socially aware employee policies. But in terms of governments, look at Facebook on data privacy and misinformation alone. You might want to eliminate them from an ESG portfolio. So let's just define ESG real quick. Obviously, the E is for environment, S for social, G for governance. This is a good article from Forbes with, I think they did a nice study here. So this was from this month, August 1st, 2021. The best ESG funds for great returns and low cost. So they did some homework here and broke down a lot of funds. And it's not that every ESG fund is concentrated with big cap tech. For instance, we're going to look at what's in the iShares Clean Energy ETF, ICLN. We're going to look at that in a moment, and you'll see that it is focused on some smaller clean energy companies. But you can explore methodology. And I want to say that, let's not blame the ETF sponsors, providers, issuers, because oftentimes the ETF is just created to track an index. So the ETF just has to buy and track whatever is in that index, which may have been created by MSCI. So there's to really break it down, you need to look into the methodology. And here you can, get quick definitions for ESG. Obviously, environmental impact. How is it using renewable energy sources? What is its carbon footprint? Air and water quality impacts from their operations? What is their attitude toward climate change? Okay. And sustainability efforts in the supply chain. All right. Now, social could be all kinds of things. Compensation for employees, diversity, and possibly philanthropy. Governance, board of directors is important, and how do they interact with employee shareholders and customers, and what is their compensation like, and is there diversity there? Is it a male-dominated board? Are they inclusive? That sort of thing. So let's look at this the iShares Global Clean Energy ETF. And I'm just on the iShares page, so we can scroll down here. You can see all kinds of performance metrics and key facts, but we'll go right down to the holdings. Here are the top holdings sorted by weight. Vesta Wind Systems. You see Enphase Energy in there, Nextera Energy, Solar Edge Technologies, Plug Power's in there at a nearly 4% weighting. So, an ETF, if you want to do some kind of socially responsible investing, an ETF might be the way to go. But you can always just Google, put the symbol in and Google holdings, and you're going to find the holdings either from the provider like iShares, or you might end up on etfdatabase.com or etf.com. And then you can decide, do you like that ETF? The other way to look at it is once you, for instance, you come to iClean here and you see these companies, maybe you've never heard of some of them, or you want to do more homework. This is a great way to do it too. What's in the ETF? Oh, there's a new idea. Maybe I should be looking at Xcel Energy or Nextera and find out what they're doing. All right. Looking back here at the definitions of ESG, this is an evolving field. I mean, there's a lot of money in it. In fact, I found this article on IBD where they interviewed one of MSCI's heads of research, this woman here, Ms. Lee. Good interview. She knows her stuff. At the time, she was saying there was 30 trillion in ESG investing. And that was in December of 2019, before the pandemic. Well, we know what's happened since then. We've got 5 new $1 trillion market cap companies. Tesla's exploded. And so now there could be 60, 70 trillion in ESG with, this dominance of big cap tech too. But again, it's a moving area. And so, one of the key of parts of the vernacular is externalities. What are the externalities and how do you measure them? Well, here's a whole list of externalities, but this is not a complete list of the ways that a company might impact the environment or people or governance, in general. Years ago somebody came up with the moniker the triple bottom line, which is not just profits but people and the planet too. There's a lot of externalities. So let's look at one big ESG fund from iShares. It's ESGU. It's called ESG Aware, but it's ESGU is the symbol. Scrolling down to the holdings, you might be surprised to find Tesla up there with big cap tech. Now, why is Tesla in here? Well, Tesla's a forward-looking company creating electric vehicles. Wants to build an ecosystem using solar power. All good things, and so maybe they score some high points there on somebody's ESG metrics. And we'll look at I'll show you the MSCI site in a minute where they're crunching this data and coming up with these metrics. But I mean, somebody could argue just as well that Tesla has a negative impact or carbon footprint with lithium mining. So again, these not all the externalities have been discovered. So here's MSCI with their ratings, and then and I'm sure if you go through here, you can find the entire methodology and scoring system where they come up with these. It's almost like credit ratings, AAA through CCC, and so if this is something you're into and you want to know the methodologies, this would be a place to start. Is the MSCI site for ESG ratings. Okay. Another thing I found interesting in my digging here, I came across a paid article on CNBC. The article was paid for by NASDAQ. It's 3 trends putting pressure on companies to begin ESG reporting. Now, the article's pretty interesting. If you read it, it's also full of warnings. The author, I don't know if the author is named, but the reason this is a sponsored advertorial on CNBC is because NASDAQ is now in the consulting business. So you've got the exchanges trying to consult money managers, possibly companies, and research firms on how to get on board for ESG, because and what they keep warning is that everyone's behind. Everyone is behind on reporting for ESG, and if you're behind now and you don't catch up quick, you're only going to fall further behind. Is the basic fear flag being waved in this article, and that's because there are big global regulatory and policy shifts coming, and that's important because when a government mandates something, the companies and investment machinery have to follow, or they're not doing business. There is a lack of trust in ESG data. Yeah, that's what I'm talking about. How is it collected? Who decides what externalities are important, et cetera, et cetera. But they see another trend here that there is a long-term capital focus on ESG. For sure, if it's more than doubled from 30 trillion to 60 trillion in 2 years. So this is an interesting article. So here's where NASDAQ is going and why they paid to have this article on CNBC, because they're offering all these services. They have an ESG advisory program. They have NASDAQ's always had a board vantage where they advise boards of probably companies and investment firms. So this is going to be sort of a big deal. And so I just wanted to share what I'm picking up and learning about all of this. I think I wanted to show you one more thing. Oh, this was a good piece right after the FT piece last summer about, hey, why are ESG stocks loaded with Fang? Or you could throw out Netflix and put Microsoft in there, obviously. So it's Apple, Amazon, Facebook, Microsoft, Alphabet. Refinitiv did this analysis. Robert Jenkins, head of Refinitiv Lipper Research, analyzed 12 of the most prominent active USG funds that held $33 billion, and that was in September of 2020. This is a good piece, and he's got some good graphics here. So, it's good to see the weighting visually. Obviously, information technology is dominating. I mean, just like information technology has gone from, 22% to probably 27% of the S&P 500. So it would make sense that you would see it, pushing 30% in ESG funds, and then energy is very low. So energy getting punished, and maybe that's what ESG is supposed to do. So you can see it by sector weights. So what role do FANGMAN stocks really play in sustainable investing? He doesn't really have an answer. I mean, he just assumes that, well, because they're IT, they have a low carbon footprint. But somebody could turn that around, just like we turned it around on Tesla with lithium mining. We could say that Amazon, with its huge warehouses and shipping, constant shipping, and then all those server farms, at Google, that those use a ton of electricity. The server farms at Amazon, Google, and Microsoft together, I would like to see that externality priced and how much energy, electricity, cooling, et cetera, to run giant data centers. I said server farms, but data centers, same thing. So this is a good piece to look at too. From Refinitiv. I'll back it up here so you can take another look. So this was September 8th, 2020, Sustainable Investing in FANGMAN Stocks. All right, I think I covered. Oh, here's one more piece. This is a good one too. This is from Ethical Boardroom. Elisa Amico wrote, ESG investing, truths, half-truths, and lies. So she's kind of coming at this the way I was this week, and so it was interesting to find her article. I have not read the whole article. It's got some deep concepts here. She addresses a myriad of corporate annual reports boast positive ESG impact without reference to any methodology, all the while skirting key governance issues such as board independence. And so, that's why I asked the question, has ESG distorted investment markets? And it's possible because when you look at the incentives for a company or an investment manager or an exchange to create this positive image, ESG is branded as this positive investing image, but who expected the distortion where you have them dominated a lot of these indexes by big cap tech? And then I think it creates feedback loops because of those incentives that you rush to get weighed and measured by ESG so you can do what? So you can qualify for what? So you can see companies and investment managers jumping through hoops to have this positive ESG either rating or just branding. And, so that's where I see, incentives could be distorting the market. So this is something I'm just beginning to research. I'm going to put out a report on it soon. And, it's going to evolve. It's going to evolve. And you're going to find very specialized ESG indexes and then ETFs that are available to us, that can tailor to your vision of the future and being able to put money in socially responsible pockets and buckets. All right. Thanks for joining me in the kitchen. We'll talk to you next week.